All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for Friday night, October 20th, 2023. We'll start with the 30-minute hybrid swing portfolio review, beginning with Alcoa. 30-minute charts. This vertical blue line indicates the, today's price action. That's the open. Today, Alcoa gap down. I tried a hybrid technique here, an advanced technique, where I'm buying after the RL10 bottoms out and then hits the skin of the dragon. I'm treating that as a front run of the PSAR. That is also the place where if I had been short this whole time, that's the dragon exit, which tells me that there's no longer a good play to the downside. So I'm taking the inverse of that and saying, well, then maybe that's an entry, a low risk entry on the other side. So that's the technique I'm exploring. So it's the dragon skin entry. It basically scratched. No overnight risk. I like the idea, though. I think you'll probably see that a couple more times tonight. AI. Covered the short from yesterday for about 4R. The stop and reverse was available. Like, that's a dragon skin exit, which also argues for if the downside move is no longer there, maybe the upside move is a tradable moment. So that one would not, if that's a stop and reverse, that doesn't lose money. Then it rolled over. There was an opportunity when the R10 rolled over in this region, but on a Friday late afternoon, in a sideways volatile market, I'm not really looking to initiate new positions, and I want to reduce my over the weekend risk. So we'll just take 4 out of AI on the short side and go home. Amazon. So yesterday we closed the short so we wouldn't have overnight risk. Had a micro gap down when it broke below the collapsing dragon over here. R10 wiggle. Got short. After it peaked at the bottom, I cover at the skin of the dragon in the usual way. And that's about 1.5. Again, that to me would have been an aggressive short for over the weekend, but really not interested in any of those. Caterpillar covered the short for a really good trade. I mean, gee whiz. Because of the tight risk box that was on there. That's 5R. And then it just stabilized the rest of the afternoon. Whereas a lot of other things were failing, that may be one to keep an eye on as a value play for next week. Cliff tried the RLXD. This is really a Kata 2. Why? Because we have a low and a higher low, and it crosses the dragon here, so I gave it a try and scratched. There was very little buying interest in the second half of the day. CVS, I will hold that one overnight, over the weekend. 1 unit of risk, 1, 2, 3, 4. That was never really in question. There was actually an opportunity for an intraday turbo right there, because after this stability zone, and then it collapsed further, and it was well below the collapsing dragon. When the collapsing dragon collapses, that's a typical move. So that's 4R. And that gives me a nice cushion to hold that over the weekend. I mean, it's not like a tech company where people are lining up in the streets to buy CVS. So that was the kind of a short I don't mind holding over the weekend. This was Disney. So yesterday we had that nice little intraday pop. And then I took it short yesterday, and it closed very poorly for a little over 1 hour in hand. Today it continued to grind, and then in the last half hour it continued to fail. So that was a decision point of whether or not to hold it or not. And on the basis of that, I feel like there could be some additional selling pressure on Monday, and there could be a favorable gap for us. So that's holding about 3R. I like that one. Dish took the SSC entry long, gave back way too much. This thing ran all the way up here and then sold off, and I gave it as much as I could, and I just ended up collecting that much, and I gave back that much. That feels wasteful. If I was going to do that again, I think I like the discretionary exit probably here at the Bollinger Band main. That's the reversion to the main, and that would have doubled my return. But still. Devon Energy, I took the intraday short. It held support here. And that's like a 1, 2, 3 exit and a dragon exit for +1. And then it was sideways and stabilized going into the weekend. So that may be a temporary low in energy. Electronic Arts, I covered the short from yesterday. There really wasn't much left in it. And then when that rolled over, I gave it a speculative play here. And it's a tight risk box. And then in the last hour, it really collapsed. So we're holding 3R to the downside with no support in sight. And that gives us a little cushion to play for the possibility of a downside gap on Monday. Emerging markets is next. No trade. The short side trade was kind of there, but it really didn't move much after the first hour. The fact that was stable is kind of a wait and see attitude. That tells me that all the traders have gotten out of that, and that's just the buy and holders just waiting to see. That's how I'm taking it. And that's an 8% sell-off in the last 5 days. So maybe that's going to, at a new 30-day low, maybe that's a sign of a bottom starting to form. We'll see. Ethereum, no trade. Mexico was experimenting with a different... I don't really like the blobs. When you're getting in really close, you have to draw it 2 widths to straddle your bar. So I was trying to get a little more precision. So this was like a morning hook, and this again is that edge of the dragon entry here, because I see the R10 is bottomed out and is now starting up. This would be the place where if I had stopped and reversed and been short here, and then it bottoms out and starts to recover, the place to exit is right at the skin of the dragon. So if that's a good exit on that short, then with this as a risk box, that was my hypothesis. That I would give that as the earliest possible entry. And it returned about 0.5. It ran all the way up into here and then started coming back down before it closed here. So I just took it there. It was just an experiment anyway for 0.5. EWZ, gap down, sell off, continuation. Took the dragon exit for an R. Intel, collapsing dragon twice after yesterday's gains. You get the open here, and then it rolls over fast. So you get a collapsing dragon from that support level and also a collapsing dragon from this support level. So that was a easy decision, standard risk, sold off harsh. And this is one, 3R cushion, harsh winter. There may be some more selling on Monday. We'll see how that goes. There's been a lot of headlines promoting fear in the market, so I think we're going to see a lot more of that this weekend, and that's what I'm holding out. IP trade of the day started with a collapsing dragon, or front running the collapsing dragon yesterday. It closed poorly right here. Today it opened and then sold off harshly. I just decided to take the dragon exit because of the 1, 2, 3, 4, 5, 6, 7, 8R. And I just wanted to put that one to bed. There's your R10 bottom. I mean, I'll get short again if that fails through this way. Could you have kept a P? Yeah, that's a good problem to have. But I like to get all out when I get out. IYR, same trade essentially for 3R. Coca-Cola, tried an intraday COTA 2. Took a half an hour on the long side, one of the few long side trades that was working today. KRE is that regional bank, and that's much like, I think of these three kind of in the same model. International and really Caterpillar. I look at those four as Caterpillar, International Paper, some industrial companies, unsexy, Main Street, mature industries. And then regional banks and U.S. real estate as the non-tech, non-finance, non-manufacturing stores of value. So I think of those sort of as the not tech, not finance, nothing special to see here. So that also means there's not a lot of fanboys that are pushing it around. So once it starts failing, it can fail for a while in a grind. So continue, re-entered short. Right around in here, I was making a decision, do I hold that over the weekend? And then it closed poorly and had a cushion of about 5R. So I kind of like that. So we'll hold that one short. Mattel, holding 1R short over the weekend. I actually don't like that one. I think that's one I should have... After the P1, that's one I don't feel good about. I think I should have taken the exit here. That's not enough money in hand to protect against a gap up. On the other hand, Mattel is also not a sexy stock, so we'll see. McDonald's, no trade. Merck, COTA 2. Standard work, 4R, exiting inside the dragon. Microsoft took the continuation trade short and a dragon skin exit for 2R. And again, in Microsoft and Intel, we'll see in NVIDIA as well, there was no burning urgency to buy things on sale on Friday in anticipation of a run-up on Monday. So this is pretty gloomy. PSAR flip, marijuana, again, a second day in a row where its range was really compressed. So it gave us about half an R. Just no follow-through. Intel, about an R, and no buying pressure late in the day. So there was a lot of that today. Clean energy, scratch after the gap down. Rivian, basically a scratch. The S&P just drifted and then continued to fail. There was a half-hearted effort to get some buying going, but they were just not having it today. Treasuries, sideways, choppy. Tesla, Tried the intraday short. There wasn't much there, about an R. That's pretty stable for a run-up potentially next week. So I really think we got a compound critical state here. U.S. Steel remains well below the Bollinger Band mean. I tried the 1, 2, 3 entry off the low, and nothing really happened. It was trying to make a run. I was actually feeling pretty good, but then in that bar it just collapsed as it got near the end of the day. So it was a lot of micro moves today. Not much to write home about. We'll shift to the. Let's see. Where's our sniper trade? All right, so this is a collapsing dragon continuation on 3-minute charts in international paper. So again, it doesn't have to be a sexy company. And that's one of the advantages of trading those industrial companies, that there's not a lot of cowboys and jugglers jumping around on this thing. And that gives you a little over 3R on a very orderly move on one position. And then the continuation trade, collapsing dragon, does exactly the same thing. And the second leg is almost the same as the first leg, but for 2R instead of 3R. And so that's a nice end of the day consolidation. And that's 5R in industrial paper, for crying out loud. This is a close-in look on that little speculative play I did in Mexico. You know, this was an exit here yesterday, and it closed here, gapped open down to here, and it fell through the PSAR, which is why you get the PSAR flip. An orderly move to here, and then an orderly move coming this way, and that's just higher lows all the way, almost like a rising triangle. And then this would have been the sniper exit or the dragon exit if that had been short. So that actually gives me a trade frame like that. And I was looking forward to get to the Bollinger Band mean and then maybe break the PSAR, but it ran to here and then started failing, so I took it at the... You basically get the width of the dragon there. And if that's a unit of risk, that's about half a unit of reward. So it wasn't much to see. But that was the basic idea. I mean, you don't know what the follow-through is going to be. But that's entering at a pretty respectable position of value. Let's take a look at the traders today. And here's Brian Lancaster. Picks up 0.82 today. PSAR flip. Collapsing dragon. Very clear pattern. This ran all the way down to Z3 and gave all of that back. That is exactly what a bottoming tail looks like. When you have a large range, runs all the way down, and then runs all the way back up and closes near the open. That is a pattern called bottoming tail, and that one is significant. Bill Brower, who programmed our are 3 trade station bundles for professional traders. While we were doing that project, he's looked at literally hundreds, if not thousands, of proprietary systems to do specialty programming for people. And I just asked him, without revealing any trade secrets, what are the things that you look at? And he says one of the very few things that always gets his attention is the bottoming tail. And we've always sort of respected that hint from a market wizard. So anyway, Brian gets this trade. There's the PSAR flip after this move. So we might have been able to get that entry here. He gets it here. That's pretty good. And I think the exit here could have been here at the edge of the skin of the dragon. But that's 0.63 and 0.2, so 0.82. He's pretty stable at his 0.37 rolling 30R expectancy. So very consistent work day in and day out. Now, George, you've got 2 trades going on in the first half hour, so I have no idea what's going on in there. And this should have been, if that's your entry there, if that's the collapsing dragon, it looks like it came down and up and you just exited. That's not an exit signal. I mean, if you listen to the briefing yesterday, if you get short here, you got to decide if that's your execution risk, the upper skin of the dragon, then exiting here is just, you're trying to preserve 0.2. I get that. And then if you're buying here, I don't see how the next one is a negative, unless that was supposed to be a red and this was supposed to be green. Then that could be a minus 0.4. But again, you don't get a reversal here at least until it breaks above the skin of the dragon or the PSAR flip. So you're exiting in the noise, and by doing so, you miss the 1.5R gain. And all of that's happening in the first 30-minute bar. If you're going to trade that much inside a single bar, you might as well go to like 3-minute bars or 10-minute bars, so you have some actual bars in order to identify patterns. There's none of our patterns work on a single bar unless you are trading a reversal where it came, a bottoming tail where it came down here, it bottomed out, and then you're buying a bounce off the low. That's not what you were doing here. So anyway, here's the move. That's a legit collapsing dragon, and that's like a 1, 2, 3. Now that's one that I like. I like the fact that you gave it an hour to fail further, and it did not. So you cashed it. This is that one where I just showed you where I tried on my trade. What I was looking at was this one where I entered the skin of the dragon with a stop down here. And then that took I think the exit was like right in there for a fraction. Yeah, that's not a collapsing dragon. The collapsing dragon happens because you get a signal that the last place that that the R10 reversed is now being tested, and then it fails, and so your collapsing dragon is here because that support level just failed. And entry short here is not a collapsing dragon. That's like a Z2 breakout or a continuation pattern or something, but there's no new additional information. Now, having said that, because it reversed, I mean, you'd have been legit taking a no-lose plus dinner for 2, and then your 1, 2, 3 exit would be here, and that's actually a 1, 2, 3 entry if you're playing the advanced strategy. And again, if you use the bottom of the R10, that one would actually have paid off somewhere in here. Not much, but I'm not in a hurry to buy that anyway. If that thing doesn't work, I think the scratch was fine. I think you gave back too much on that one. Now this is a collapsing dragon. Why? Okay, we're on 3-minute bars. And this was my point earlier, that if you're going to be trading that fast and having that short of a duration of a holding period, when you go to the 3-minute bars, you actually can see support levels. You can see where support levels break, where support levels break. Oh, that's why this is a collapsing dragon. Short, smash, and then a dragon skin exit for 1.5. Very, very orderly. All right, that was the, let's see, let's take a look at Mark's work here. Mark brings home 3.8, just trading the British pound. The pound dollar, and this is on 3s. PSAR flip, breaks the VWAP, enters short, and his risk is the top of the dragon. So that's actually a technical signal. There is a logic to that. It says that if this does not fail, but instead reverses, the price that tells him that that downward move is over, he's taking as the top of the dragon, because that's a statistical measure of resistance. That was the upper limit of this move according to the statistics that compute the dragon. So he takes that as his execution risk. And then this is really like an owl short. And then he smashes that for almost 4R. And then actually gives back too much. He gave back a full R by not exiting at the skin of the dragon. He gave back that extra, and that's where his entry could have been on this trade, which is fine. Then he tries this one short. Look how much we gave back. We kept this little sliver, and we gave back that much. That's sloppy. That's being disrespectful. Eat the whole cow. That's a bottoming tail. And then reversed immediately higher. So this is where the entry should have been, with a risk box like that instead of a second entry. So if you get this one and exit where you're supposed to, you're in the 0 state, and now 3 bars later, you're ready to take that as a kata 2. And then you get this trade. This one stuck around too long. This is supposed to fail right away. It does not, and you gave it 8 bars before you took the VWAP exit. And then that should be, if you're going to do that, that's a low-risk buying position. But I think halfway into that, when that starts to turn, you should be out at the skin of the dragon. But you really should be shorting it when it crosses the VWAP. And you should be getting long when it crosses the VWAP. Now this one, when it hits the VWAP and does not fail, guess what that means? That means the VWAP is acting as support. Now notice that here it got the RL10 got right to the VWAP and held and did this. It pulled back. This time it couldn't even get through the dragon in reverse. So now there's an extra layer of strength. It didn't get all the way back to the VWAP. So that makes this a high priority Kata 2. That's where you got to enter rather than here, which is a full, more than a full R. And then you could actually make that a second entry right here on the second Kata 2. We could be short at either one of those. That's breaking through the Bollinger Band mean, and that's fine. Now look at this. Come on. It got all the way through the VWAP, all the way to Z3, and then did not fail further. So it's starting to reverse, and we gave back that much. We gave back 2R and kept a third of an R. That is wasteful. That's probably mental fatigue. So improve your cardio and recognize those bottoming, recognize the rejection of the VWAP break. It reversed immediately. That's a signal. Covered that yesterday. Good entry. Could have added. Again, you're already up here by Z3. You had 3 bars where it did not continue. Take the exit at the edge of the dragon instead of giving back a full R. So this was 3. This should have been 8. All right. Weekend reports. The Japanese word to study is muda. Which means waste. And in the Toyota production system, which is the machine that changed the world, they eliminate waste. They shrink wrap all the parts and stuff that they ship so that there's no air in the box that they're shipping, because they don't want to pay the freight on shipping air to their customers. So there's no air in the box when Toyota ships it. Eliminate waste. And having a lot of profit in hand and then giving most of it back to keep just a fraction of it and giving back that much, that is wasteful. Sideways volatile market. This is the argument for the short side positions that I held. Every one of them except one, which I felt bad about, had more than 2R cash in hand. And it's happening when the market closed very weakly at the end of a down week. The risk Z had rolled over. We're under the 200-day moving average, and we're in volatile conditions. If you were ever going to hold a short position overnight, that would be the one. You may notice that once again the ETF2 asset allocation model has everybody safely in cash for those following that conservative strategy. Very good risk mitigation technique. In the regression line fractal framework, looking at daily charts on the S&P, we have the RL30 rolling over. The price has already broken through the collapsing dragon. The R10 is soon going to join it. So that is very, very weak. And if that breaks, it breaks down to 410, which is this support level. If that breaks, it's down to 390, back to this support level. So this series of lower highs is all about K2s to the downside. So when everything crossed the RL270, that's the alert for a downside bias. And then especially when it breaks through this buffer, this gray zone buffer, which is a Bollinger Band 30 and 1 on the RL270, that gives you sort of a noise buffer. When it broke that low, clear downward bias for the conservative bears. And then this is significant. The RL270 has come into the station and got flat. It's in the 12 o'clock position. The 90 has already rolled over, crossed through the 270, through the buffer, and is getting ready to cross the dragon, and is the longer term health of the trend, longer term trend health check. So this is the last hope for a buy on dip, is the 270 as an upward target. But even that is running out of steam, and that's going to slowly roll over as even the conservative money will start bailing. So just let me also finally reiterate, places where the fast, slow RLCO occurs. Here's where the 30-90 crossover occurred. Here is the 90-270 crossover. You get a 1030 here. That happens a little, fairly volatile. But when the longer term RLCOs are happening, that's sort of like guideposts. And now if the 30 rolls over and breaks below here, that is a really negative situation. And now the MACD is already telling you that. It's in the Red River and getting ready to reject the 0 line for a downward move. Gloom, despair, and agony. The 3-day R10 wiggle to the downside. Here's the support at 410. And then there's where that support channel breaks at 390. So that is a thick $20 support zone. And this is getting ready to test that. Wanted to look at the 9-day. Here's a simplified way to do, like a market classification with the 9-day. And it's simply using the R10 and the dragon to help you make sense of this thing. When you have a long, strong trend, you can see the PSAR supporting the dragon, supporting the R10, until that peaks and rolls over, and now the 30 rolls over, and the dragon rolls over. This is owl territory, and that's where the R10 comes through the dragon. That's the RLXD. That means that run is over. That's a new sheriff in town. So you could just use that as a market classification. I have a bullish bias as long as the dragon is up, the PSAR is up, the R10 is rising. When that rolls over, warning, alert, that's the signal that the run is done. And now you can have a downside bias. And look, it reverts to the mean. This is the Bollinger Band mean, which is the SMA 30, the middle of the river. If I know that, I don't have to have the river painted on there to know what it means. So it can actually clean up your dashboard a little bit. Notice that when the R10 breaks through the Bollinger Band mean, you get the collapse. And then here's where the R10 bottoms out. There's a bottoming tail. Here's the alert. That's like the dragon skin exit. And then this is kind of the RLXD buy. And when that fails at the skin of the dragon, alert, confirmed, alert, long side bias, alert, short side bias. When the R10 gets through the Bollinger Band mean, that's crossing to the other side of the river, and it's going to be dark and ugly. So when you think about market classification, you are free to use your imagination and creativity to help you in the time frame that you are interested in. You don't have to use other people's market classifications unless you're using their systems. But I use this all the time. This is how I have replaced the BMR, market classification rules with this, because that's easy. The 9-day bars is slow. You get the same thing on the 3-day with fast. And just interpret it based on longer term bias. You cannot be surprised by turning points with that strategy of using 3-day and 9-day bars to smooth price. And you'll get all the big moves. This was the big move that came off of COVID way back in 2021. Ancient history now. Here's that test now of the collapsing dragon. If that fails, here is the last solid support 2x4. And if that breaks, look out below. If it breaks below 407, look out below. So we're going to learn something about conviction and commitment and the plunge protection team. This was a nice move that we enjoyed on the long side with short-term hybrid swings. We've been making money on the short side on that swing. I'm ready to make money on a recovery or a collapse. Why? Because this is a compound critical state. It's ready to go large in either direction. So I'm just going to cultivate the zero state and get ready to cooperate and graduate. Hopefully that illuminated you. The 30-day showing big range move today, closed poorly, collapsing. 30-day close, collapse. Very few, even the things that were in the green lost money this week. They just didn't lose as much as the things that are getting slaughtered. When those are traditionally defensive plays, and they're getting absolutely murdered. So I want you to tell me how useful back testing is. Like if you used a 30-year back test, And in that back test period, treasuries and U.S. real estate were really good defensive plays, so that if the S&P was going down, they were going up. And if you did a lot of back testing, you would come up with a set of system rules that said, hey, when the S&P is getting murdered, rotate into treasuries and IYR, and this is what you'd have gotten: slaughtered. Whereas the S&P over the last 6 months is up 2.6%, they're down 15 and 20%. So how good is the back test that's relying on those historical tendencies and correlations, whereas right now those correlations are broken? How many other money managers are out there that don't know anything, that are using 30-year-old heuristics that somebody handed to them and said, follow these rules and be a fiduciary? Drives me nuts. I hate complacency. Let's have a sense of urgency about what we're doing. World market model, the U.S. large caps are pretty good, but that's about it. But all of the indexes remain in cash. The S&P sectors, only energy is above its 4-month moving average. Commodities, gold, and oil are the only asset classes doing anything right now. Standard work. Where is the volatility and the liquidity? You find it here. What are the excellent tradables? Semiconductors, oil exploration, Brazil. The equally weighted S&P, that's a lot of traders starting to trade that because it's outperforming the cap-weighted SPY. It's twice as volatile. Oh, no, half again as volatile. No, I'm sorry. Not RSP. That was biotech, gold, and regional banks. Almost lost my mind on that one. But it's interesting to see the equally weighted ETF actually make an appearance now. That's actually a relatively recent phenomenon. Let's go to the daily. Look how bad treasuries are. They're in the second to worst. Pain and suffering everywhere. We've seen that. The tail of the tape, you can read that as well as I can. You should not be surprised that there is a ton of good choices on things that have favorable reward to risk ratios, and lots of things melting down, and lots of 5DDs as a reliable trade frame. That of all the of the 6 mechanical swing systems, which we teach in the mechanical swing trading course, home study course, self-paced. So Phil and Griff have been working a project with EdgeRater, which is an Excel-based toolkit that we're going to have a long-term relationship with, and it offers back testing. They just did a 10-year back test on all 6 of the mechanical swing systems. All 6 of them are positive expectancy with mechanical trading, and the one that's the best by far is the 5DD, my favorite pattern. Has a profit factor of 2.7. And better than 50-50 win rate. And larger wins than losses. Just saying. ETF 30 Tactical, the same story. Tons of auto framers, tons of things getting murdered and collapsing. Only gold is showing any resilience. I think that's everything. Yeah, that shows you the NDX, shows you everything. And then the trading value list: marijuana, Tesla, clean energy, Nvidia, uranium. Uranium's starting to put in an appearance. There you are. Look how good Caterpillar is, 2.5%, and a favorable fraud quality number. That's why I trade that one. All right, fellas, that's everything. We'll get this published and posted. I think the book is going to get published tomorrow. They were supposed to send us the link tonight, so we're going to have a link available for digital purchasing this weekend. All right, take good care, fellas.